Hi everyone, good morning and welcome to my weekly update with me, which is market analyst at Handset Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've obviously had this non-farm payrolls report, which on Friday I think changed very little in terms of the December rate hike expectations. However, it did contain a few interesting little snippets that maybe suggest that the Fed might not be hiking as quickly as perhaps previously thought next year. We have that U6 unemployment level that continues to fall. There is slack in that number by around about 1%, possibly back to the levels it saw at the just prior to the financial crisis in 2007-2008. And the average hourly earnings were again a bit disappointing, weren't they? So there could be a little bit of room for the doves in the FOMC to still hold back and not go through with too many further rate hikes next year. Perhaps the market's got a little bit ahead of itself, and that could argue that perhaps the dollar maybe have had a bit of a strong run earlier in the last few weeks, maybe starting to find a little bit of sort of pressure, maybe possibly for a bit of a profit-taking move. Now we've got the ECB this week. That will be the main focus because at the beginning of the week, the Italian referendum certainly has caused a lot of volatility. Big reaction on Monday. Initial selling pressure through the euro, then the euro bounce. Initial selling pressure through equities, then May bounce. So really significant volatility that we have seen. Now we're going to move back out towards the ECB on Thursday. What will the ECB do in terms of monetary policy? Are they going to extend their quantitative easing program? Are they going to extend the time of the duration beyond March, and also possibly even tinker around with the purchases and the purchase limits as well? So lots that we could see. Will they start to talk about tapering even? It's a lot of question marks there. Just as an FYI, it's about 12 months pretty much since the December meeting in 2015, whereby the ECB disappointed with the easing measures and the market created a significant bottom there. So really interesting that we could see that possibly again this week. Now moving on to the Forex markets, we've seen the euro, which has been flying around this morning. It initially moved towards a new low dating back to March 2015, then rallied sharply, and that possibly even now producing a bit of a base pattern against the dollar. Now in terms of sterling, we're looking out for continued move higher. Actually, it looks like it's pulling back towards the old key range low around 128 big figure. Can it continue to move that, and also ultimately can it push through 128 figure? In terms of dollar yen, it's sort of giving a bit of sort of exhaustion signals, but again the risk appetite has improved as the morning has gone on today to rally dollar yen. But will that rally last? That is the question. Now, also we look out for the RBA and the BOC this week, the Reserve Bank of Australia and the Bank of Canada, both giving monetary policy updates at volatility on those Forex majors there. Now, in terms of your indices, prior to this morning's rally, we've seen the markets just beginning to roll over. Yes, you've had this strong recovery today, but will it last? I'm not so sure. I think it could be a bit of a sort of a rally that gets sold into ultimately, because I think these equity markets have a long run higher and they're beginning to look a bit tired. I think if you start to see treasury yields falling away, possibly even the dollar as well, that could start to sort of come up against a bit of profit taking, and those equity markets might be under a bit of selling pressure on the back of that. So you're looking out for the resistance on the S&P 500 around 22.14 coming into place. You've got the DAX that's rallied back towards 10.700, 10.800, again big area of overhead supply, and the FTSE, which has barely sort of really moved today, didn't really take too much heart from that oil price rally, and it's sort of under a little bit of pressure. That 66.12 to 66.76 level on the FTSE is certainly a key support that needs to hold. Now, on your commodity prices, well, we've got the gold price, which again remains under pressure. Downside moves, rallies are getting sold into, lower highs, lower lows, fair momentum across the board. Doesn't look good. Testing possibly the 1160 level. If you break below that, you're looking at 1125. In terms of your oil price, certainly oil has been boosted by that OPEC deal that we got last week in the biennial OPEC meeting. But can it continue high? It certainly looks as though it's sort of breaking out and now needs to hold above the low 50s on both WTI and Brent crude. so that it can start to build into that sort of support, into that next range, which is sort of 50 to 60 bucks area. So it'll be interesting to see if that can hold. So what have we got to look forward to for the rest of the week? Well, we've got on Monday, we've had the service sector PMIs coming out. The markets will be looking out for ISM non-manufacturing to impact on the markets. We've got the RBA Tuesday factory orders as well for the States. Expected to come out on a pretty positive number for factory orders, so it'll be interesting to watch that one. We've also got the Bank of Canada Wednesday, and also then the ECB Thursday. That will be the big main event that everyone will be looking out for. And a lot of volatility can be expected on the euro on the back of that one. So we end the week with the Michigan sentiment. There is quite a bit of Chinese data, key Chinese data towards the back end of the week as well. We've got trading, we got imports, exports on Thursday, and also the inflation data on Friday. So we could see a bit of volatility on the risk appetite on the back of that Chinese data. So quite a lot to look out for this week. And I wish you good luck in your trading. And I'll speak to you next time. Thank you.